this note, I would request Mr. Krishnan to come and share with you the journey of Paradeep Phosphates and what lies ahead for investors who would be onboarding this journey now. Over to you, Mr. Krishnan. Thank you.
Thank you, Vivek. Good afternoon, everyone, and thank you for taking your time out for this presentation of ours. It's indeed a pleasure for us as management of Paradeep Phosphates to introduce the company and also let you know in terms of our journey and what we're going to be doing in the coming years. First and foremost, I think it's important for all of us to realize that we are a core part of the agriculture economy in India. As you all know, despite various challenges over the last 2 to 3 years, whether it's a pandemic or all related issues that we have seen, the agriculture sector in India has done exceedingly well. And within the agriculture sector, you've seen fertilizer, which is one of the core manufacturing industries in India, has consistently performed right through this period. And the reason why I'm highlighting this fact of agriculture and our own company is that fertilizer is something which is core to soil health. And if you look at the entire prospects of soil health in India, the prospects of the agriculture ecosystem is going to be absolutely important for us to ensure that we get the right kind of nutrients which are available, which will be applied and which are scientifically proven for the kind of crops that we are going to look at. We are seeing a surge in terms of agriculture activities. We are seeing that Indian agriculture is not only meeting the food security demand for the country, is currently a very robust partner in the global value chain. It's been exporting, and the export track record of the agriculture segment has been very good. But coming back to our own company today, India agriculture and India fertilizer, if you look at it, the growth story started in the 80s. And our own company, Paradeep Phosphate, was a company set up in 1981, and it came into production in the late 80s. This company was taken over privatized by Government of India. In the year 2001 is when Zuari Morocco Phosphate, a joint venture of the global leader OCP, along with an Indian major, Zuari Industries, was formed. And this took the initial 74% stake in the company. Thereafter, with a view to increase the efficiencies of the particular plant, there was a rights issue done, and the stake of the company increased from 74% to 80.5%. And the balance residual stake of 19.55% remained with the company. And I must tell you, friends, that between 2001 and today, the company that was initially acquired by the management has really seen a significant progress, both in terms of manufacturing efficiencies, manufacturing capacities, and the way we have finally penetrated the market. At this point of time, we are looking at manufacturing 1.5 million tons of fertilizer at our site as of December last year. We are looking at expanding this capacity to over 1.8 million tons of fertilizer. We have actually 4 units out there in Paradeep, which is highly fungible, can really work across products that is required by the farmers for various types of NPKs. We believe the future of agriculture, the way it is going to evolve in the coming years, a lot will depend upon soil health and how soil nutrients are managed. And our entire story is about how we interact with the farmers, how we have been able to find right kind of solutions, how we have been also innovate products that are required and making the same available. And a couple of key highlights for our company that you must realize is we have a very large infrastructure at Paradeep. We have our own port which handles all the imported raw material that we do. We have a large site where we are able to not only manufacture the current production, we have a significant ability for us to move forward and grow from there on, which is a big advantage that we're looking at. And the second big advantage is India is a net importer of phosphatic fertilizer. Being a manufacturer, it gives us a big edge in terms of making these things available. At the same time, having access to a very strong global supply chain makes us a very dominant force as far as the industry is concerned. And I'm really glad that we are at a point where all key raw materials are sourced by us from global majors based on long-term arrangements and strategic investments that they have with us. So this is really an interesting journey. And we believe that our journey from here on, from the 15 lakh tons capacity that we have to 30 lakh ton capacity, which we are going to be reaching over the next 3 quarters, will make us one of the largest fertilizer makers in India with an all-India presence. Strong brand, gentlemen, is what we have. Navratna in the eastern part of the country, and in the western south, we have Jai Kisan. And between Jai Kisan and Navratna, I think we are going to be one of the strongest brand-based distributors in the country today. And our reach, which is pan-India, also gives us a very good protection from various situations, whether you have a whether you have monsoons which are not working well in a region or otherwise, we will be in a position to really work around our markets very well. And I'm really happy that our product range is, as we speak today, has both specialty NPKs and generic NPK that is required, and also the base capacity of DAP, which is a major nutrient in the market today. So this is where we stand today. We have a presentation which takes you through the journey in terms of what we have done, and we will be glad to answer any questions thereafter. Thank you.
Thank you, Mr. Krishnan. Good afternoon, friends. Once again, it's an absolute honor for us to be able to be here today and present the credentials of the company. We have a very short presentation for taking you through the highlights of the company. Some of it will be a repetition or a greater enumeration of what Mr. Krishnan just mentioned. Let me go straight to the slides. Firstly, the offering summary. We are raising 1,000 crores of primary into the company to be utilized under three buckets. Around 55% of the 1,000 crores, which is 550 odd crores, would be towards partial payment of the Goa acquisition cost. The balance payment has already been made. This is the last tranche that needs to be paid, and then the Goa transaction will be completed. 25% of the 1,000 crores, which is around 250 crores, would go towards repayment and prepayment of certain borrowings of the company. And the balance 20% or 200 odd crores would be towards general corporate purposes. This apart, there is offer for sale. Government of India currently owns 19.55% of the company. Government is exiting the organization fully through the IPO. So they are offering their entire 11.2489 crores of shares on sale. That apart, there is a small portion of something like 60 lakh shares amounting to a total value of something like 20 to 25 crores, which is being offered by Zuari Maroc Phosphates, who's our other promoters, currently owning 80.45% of the company. That is largely to bear the issue expenses on behalf of Government of India. The way I have tried to structure the presentation is under three buckets. Firstly, an industry update. Obviously, a lot is happening in the fertilizer industry, driven by events globally. So this is about both global and India in terms of the fertilizer industry update. Then a few slides on what PPL is all about. So what Paradeep Phosphates is all about. And lastly, of the company, in order to understand the company better and understand the strategies that the company is following, a few slides on the key strategic choices that the company has made. That's how we've tried to structure the presentation. So the first is about the global crop market. So the chart on the left talks about the food prices globally, and we have and there is a distinction between what's happening in the developed parts of the country versus what's happening in the developing parts of the country. So we have taken the developed nations. So there's what you see is a US corn, US soya, and US wheat prices. And when I say US, it is actually the same phenomena is visible both in North America, South America, which is the entire Americas, as well as in Europe, where the food prices are at a historic high. And now what that is resulting into is a phenomena where the farmer level affluence is going up. Farmers are having greater disposable income available to them, which is in turn making them maximize crop acreage, which means they are not leaving any part of the soil uncultivated, and they are also not being miserly at all in fertilizer consumption. So the fertilizer demand has also gone up. So the chart on the right comes, which is the DAP affordability index. So how's the global DAP prices behaving? They're at an all-time high. 2008 is when last time the world witnessed the kind of prices that we are witnessing right now. And these prices are also, while it is being acceptable in the developed nations, in developing nations, this is causing a lot of stress at the farmer end, because the farmers are not so much willing to accept those or able to pay for those high prices. Now, coming to which is in everybody's mind about the Russia-Ukraine war. Yes, this is having a very an impact on the overall crop and the fertilizer market. For example, Russia and Ukraine, these two countries are called the wheat basket of Europe. Over 30% of the global wheat exports used to come from this country. As a consequence of mass migration and the destruction to the fields, we expect in much of 2022, these crops would not be available, and therefore the food prices are likely to remain high going forward as well. Moving to the next slide on what's happening to the global fertilizer industry and what does those events in the global fertilizer industry, what does it mean for the Indian fertilizer industry? So globally, if we look at the global demand drivers and the global supply drivers, the war again and the sanctions on Russia is making or putting constraints on the global supply chain. So Russia as a nation, for example, is one of the preeminent suppliers of major raw materials, things like 22% of ammonia, 14% of urea, 11% of phosphates comes from Russia to the rest of the world. With sanctions, these are not available to the customer companies of Russia. As PPL, we do not buy a single ton of ammonia from Russia, for example. But our suppliers, and we have got long-term tie-ups with companies like, with a nationalized company of Qatar Energy, with a major aggregator of the world, Tramo. So all those companies are also coming under stress because the customers who are being deprived of Russian ammonia are reaching out to them. So it's putting a stress on the global supply chain. Moving to the right, in terms of demand, India as a nation, we know we import over 50%, close to 60% of phosphates. With the supply chain being impacted, many of the global majors who would have otherwise exported to India are not able to export fertilizers. And therefore, this year, for example, 2022, we are not going to be able to import fertilizers to the extent that we would have otherwise liked. So our import availability is going to remain constrained. We are going to witness high prices as a consequence of low availability. And therefore, the message for a company like PPL is clear. We need to maximize capacity utilization. We need to make as much as we can. In fact, the second point on the right side about inventory. The country's stocks as of December 2020, the total fertilizer stocks was at around 18.7 million metric tons. Last year, which is December 21, this came down to 8.8 million metric tons. So this shrinkage in stock is something that cannot be met in a year. It's a 10 million ton of stock. We believe this shrinkage can be met over a period of something like 36 to 40 months. And within this period, we need good availability of imports, which is not going to be there. So again, the first 2 points on this chart on the right tells that manufacturing heavy companies like PPL have only one strategy to pursue, which is to maximize domestic production, and that's what we will continue to do. Moving to a few slides on the company, and again, as Mr. Krishnan alluded to, we believe we are what we call a zero distraction phosphatic player, and I'll explain why we have made this strategic choice of remaining core to phosphates, of remaining a player who believes that the prospect of phosphates in the country and globally is very high. The products that we make is something like DAP, which constitutes something around 40 to 50% of our total volumes. The second highest selling product is N20, which is nothing but 13, 20% nitrogen, 20% phosphate, 0 of K, and 13% of sulfur. And we also make other grades like N10, N12. We have made a good business out of the byproduct called gypsum, which comes out of the phosphoric acid manufacturing process. We do a little bit of trading as well. So these are the main products that we make. The brands under which we sell, and this brand, our traditional brand has been Navratna, a brand that is very strong in the East. With the acquisition of the Goa plant, we are going to be also getting rights to the Jai Kisan brand. Jai Kisan is one of the oldest and the most trusted brands in the fertilizer space in the country. It has formidable brand equity in the western markets of Maharashtra, Karnataka, etc. So this brand will be available to us. We have a very elaborate sales and marketing network. Now with the addition of Goa, we are going to be present in East, West, and South, and I'll come to more of that. A glimpse of our financial performance up to December, which has been also featured in the Red Herring prospectus. as against last year 9 months, which is April 20 to December 20, where our total revenues were 3,600 crores. This year 9 months, which is April 21 to December 21, we are at 5,960 crores. The EBITDA of the company has gone up from 484 to 592 crores, and PBT has moved from 337 crores to 482 crores. One of the key yardsticks by which an import-dependent industry looks at is EBITDA per ton. So our EBITDA per ton last year, 9 months, was at 4,433 rupees per ton. This year it has moved up to 5,463 rupees per ton. It's one of the industry benchmarks when it comes to EBITDA per ton. And this has been made possible because of the backward integration that the company has, especially around phosphate acid manufacture. A very important slide, this is about what is it that the company is doing? What is it that the company plans to do with the capital that we are raising and the repayment of debt that we are talking of? As of 31st March 2021, which is last year, the company had 12 lakhs or 1.2 million metric tons of total fertilizers. During the year last year, we completed the debottlenecking of 2 of our 4 trains, which added 3 lakh tons or 0.3 million to our capacity. So we moved from 12 lakhs to 15 lakhs of total capacity. The addition of the Goa plant, which will be completed once the IPO is done, will give us another 1.2 million. So we will move to 2.7 million. And then the remaining 2 trains debottlenecking, which is currently underway, will be completed, one of them in May and the next one in September. So by end September, we would have a run rate of 3 million metric tons. So we are virtually moving from 1.2 million metric ton to 3 million metric tons. And the whole thing is going to happen in the calendar year 2022 by end of September. I talked about backward integration as a reason why our performance generally is better than our peers. So we are today the second largest private sector manufacturer of phosphate acid with a capacity of 3 lakh metric tons per annum. We are in the process of augmenting this capacity to 5 lakh metric tons per annum through a retrofit program. And this capacity expansion will be completed by October, so that by the end of October, we would be having 5 lakh metric tons. And this would be close to 90 to 93% of our total phosphate acid requirement that we would be having. We talked about the sales and distribution network. PPL traditionally has been very, very strong in the East. With the acquisition of the Goa plant, we would be one of those few companies of the country, and certainly better than our closest competition, because unlike them who are very heavily invested in a couple of states of the country, we would have a pan-India presence. Now, what's the problem of being invested in only 1 or 2 states, which is what was the case with PPL all this while? We were heavily invested in Eastern India. So God forbid if Mother Nature would not be kind on Eastern India and there would be a flood or drought in Eastern India, our fortunes would be impacted, just as some player who's heavily invested in AP, Telangana, etc. Now, with the addition of the Goa plant and we having an asset in the eastern part of the country and an asset in the western part of the country, and our sales and marketing footprint being virtually pan-India, and if you see the presence of our network and the share of sales that we will get from various parts of the country, we would be a formidable player in East, West, and South. We have talked of the brands that we will have. Both Jai Kisan and Navratna, we intend to have a dual brand strategy going forward. Jai Kisan would be the brand for West and South, and Navratna would be the brand for the East. And that's how this dual brand strategy with a very, very strong sales and marketing network, which will be pan-India, is how we would like to continue to serve our end consumers, which is the farmers. Coming quickly to certain key strengths and strategies and kind of elaborating the points that I alluded to earlier on. Why is it that we have chosen to remain a dedicated phosphatic player, or what we call a zero distraction phosphatic player? The urea market in the country is growing at a CAGR of 1 to 1.12%. As against that, phosphates are growing at 3.5%. Within that, DAP is growing at around 3.4, 3.5%, but non-DAP phosphates are growing at a whopping 9.7 to 10%. And we believe our growth going forward is going to come from these non-DAP phosphates. And why is it that non-DAP phosphates will come? That's the little chart in the middle, which talks of balanced fertilization. Just as a human body, we talk of balanced nutrition. Similarly, plants and soil need what is called balanced fertilization. Urea is a product which only has nitrogen. But us, which is phosphates or the complex fertilizers as it is called, we provide not only nitrogen, we have nitrogen, phosphorus, potash, sulfur, and even a few other micronutrients can also be added to the offering that we have. Which is why when you do a pyramid of the farmers, and we do, and this is not on income only, it's on awareness of the farmers about farming techniques. The top of the pyramid farmers or the middle of the pyramid farmers understand that it is the phosphatic fertilizers which are beneficial for their soil, both from an yield maximization point of view, as well as from the point of view of preserving soil health. And that's how we believe that the future of the fertilizer industry is more hinged around phosphates, and that's a global phenomena as well. I'll move to the next slide. We are today the second largest manufacturer of phosphatic fertilizers. We are, as I said, the reason why we are more profitable than many of our peers is because of the extent of backward integration that we have. We are, in terms of the phosphoric acid capacity that we have mentioned that we are moving from 3 lakh metric tons per annum to 5 lakh metric tons per annum. By this, we would be the largest backward integrated player of the country. In terms of our sourcing, we source exclusively from our partner, which is OCP, who's also our promoter. But I have a slide on that, and I'll come to that. Also backward integrated when it comes to sulfuric acid. One of the largest sulfuric acid capacities we have in the plant, which is around 1.2, also be self-sufficient on power. In fact, the heat that is generated from the sulfur melting process is used to generate. We believe from a sustainability point of view, it's a green power source, which means that we use the byproduct of sulfur heat. And because of this, our cost of power generation is 1.5 rupees per unit, as again something close to 5.6 to 6 rupees that is available in the grid. So these are some of the efficiencies that we have of the plant in the Paradeep site. The raw material sourcing, as a nation, we must remember that India does not own any of the phosphatic raw materials, and most of these raw materials need to be imported. And I've alluded in the earlier part of the presentation that we have long-standing partnerships for all the raw materials, whether it is for ammonia with the Qataris and Tramo and another company in the Middle East. When it comes to the phosphates, we are exclusive with our promoters, which is OCP. No other company in the country is exclusive with OCP. That's a matter of strategic choice that we have exercised. PPL is also the largest commercial account of OCP in the country, and therefore we enjoy one of the best commercial terms. And that is the reason why in our manufacturing value chain, we derive higher efficiencies, and all of these are protected through long-term contracts. And with our phos acid expansion coming in, the quantum of these procurement from OCP is only going to go up. So while we are already the most prolific commercial engagement for OCP in the country, that level of engagement is only going to get deepened going forward. We own our own port in Paradeep. This is very few companies can boast of having a captive jetty. In fact, when we do not use it, we actually give it to a few other companies. Like there is Adani Wilmar that is there. Sometimes IFCO comes in. But we have our own jetty, and that will take care of all the expansion that we have. The land that we have in Paradeep is over 2,200 acres. The current plant occupies only 33% of the land. So we can actually create a mirror image of Paradeep, of the current plant in Paradeep itself, still have 33% available land with us. Very few phosphatic fertilizer sites, or even overall fertilizer sites, can boast of this kind of excess infrastructure in terms of land availability in today's times. We own The port operations is very important. Port operations is virtually automated. We've got for everything, whether it is rock phosphate or sulfur or MOP, it is transported through conveyor belts. There is no human intervention. When it comes to ammonia, we've got pipelines that take ammonia at minus 33 degree Celsius, cross-country pipeline right from the port, 3.4 kilometer long from the port to the plant. Similarly, phosphoric acid, we take it through pipelines. One of the best infrastructures that any fertilizer asset in the country can have. Even in terms of storage capacities, we have one of the best state-of-the-art storage capacities. Like for, just to give an example of ammonia, we've got 50,000 tons of ammonia storage capacity, one of the best in the country. And in fact, the other industries in the eastern region actually depend on our ammonia sourcing capability because they need small quantities and we supply it to them. And our ammonia is kind of stored in double-walled atmospheric ammonia storage tanks. Again, one of the state-of-the-art from safety point of view as well. This is the last slide. So what is it that we believe is our right to win? Why is it that we think we have a future which is better than some of our peers in the industry, both in India as well as globally? Firstly, as we are talking, this 2022 is a very, very significant year for the company, not because we are going through an IPO, not because government is exiting the company, but because the company is going through a massive capacity expansion. We are moving from 1.2 million to 3 million metric tons. Not only this, we are also deepening our backward integration by moving from 3 lakh metric tons of phos acid to 5 lakh metric tons of phos acid. And this will help us in our cost efficiency and deepening of our margins. Through the acquisition of the Goa plant, we are getting access to 6 key states of the country. These states are very, very vital when it comes to phosphates. It's close to over 44.2% of the total phosphates are sold in the states that Goa sells, which is Maharashtra, Karnataka, MP, Chhattisgarh, AP, Telangana. These states account for over 44.2% of the total phosphate sales of the country, and that market will become PPL's once we acquire the Goa plant. The brand leadership we have already talked of, Jai Kisan and Navratna coming to us will make PPL the owner of 2 of the most formidable brands in the fertilizer space. And of course, the good talent that we have in the human resources and the managerial and technical pool that we will get through the acquisition plus our own is going to be of value to us. And we believe going forward, we would continue to remain alert towards inorganic growth opportunities that may come in our way. Thank you very much for the opportunity. We would be happy to take more questions that you may have. Thank you.
Can we have questions from the Mumbai media who are present in the hall?
Good afternoon. My name is Geetanjali Kedia. I'm from SP Tulsan Investment Advisors. Why is your interest cost reduced in 9-month FY22? It's nearly halved from 110 crores last year to about 43 crores.
Yeah, better management of receivables. We got all our receivables cleared pretty well, both from the market and from other stakeholder, which is government.
So since government has cleared the subsidy bills early since COVID, is that reducing?
The subsidy bills outstanding with the government is practically nil as we close the year. Yeah.
Secondly, what is your current capacity utilization?
1.5 million tons is our capacity as of December, and we are pretty much using 100%.
And your cost of production as a percentage to sales has increased from 70% in FY20 to almost 79% now.
That is in line with the spike in the commodity prices that you get to see.
Okay. Yes. So is this, can this then increase further because commodity costs don't seem to be?
Well, as we speak right now, there is further spike as far as the commodity prices are concerned. And that trend is there for the entire industry. But the good point for us is that at the farmer level, it has been well insulated and there is no demand destruction because of this. And the cost is being fully recovered by the company.
Lastly, if there is such high growth visibility for the company, why are the margin, the P multiples at which the issue is being priced at such a discount to the peers? Why is the pricing so?
Well, the pricing is a part of the book building process. I've got bankers here who can explain that to you. Yeah.
So, ma'am, we appreciate you appreciating the fact that it's a very well priced and a reasonable issue. We take that compliment from you. So the pricing is an art, okay? And we went around, met a lot of investors, and we have built a book. And the book is very robust. It will should be out tomorrow, and you will see it for yourself. Basis which you can take the call. The underlying philosophy is that this is a very reputed group, which is a company from a very reputed group, which is going public. There are also Deepam, which is participating in the offer for sale. So the issue has to be well received from all sides. So we have kept various angles and objectives in mind while deciding the price band.
So you didn't get confidence at a higher price. Is
No,
that what?
if you believe pricing an issue at a high price is a confidence, then we have that, and we yet chose to be conservative.
Last clarification, you mentioned that the promoter is doing a small OFS to meet the expenses of the.
This is the requirement of law
Okay,
when an OFS happens. Yeah.
okay. Thank you.
Hello, sir. This is Yash Jain from CNBC TV18. I just wanted to understand the part about the IPO proceeds which go towards the acquisition of the Goa unit. So this unit, first thing that I wanted to understand, what is the enterprise value as far as this unit is concerned? How much has been paid? And this unit also carries some amount of debt. So what will be the cash and debt component that you'd be paying?
I just wish to clarify that the acquisition of the Goa facility is through a business transfer agreement and purely a slump sale. So it's primarily an asset purchase that we're doing. So no other debt is coming along with this transaction. That's the first point. And in terms of the consideration that you're looking at, the asset has been priced at close to 1,600 crores. That is the valuation for the asset, against which we've already paid the 1,050 crores, and the balance 550 crores is going to be paid from the proceeds of the IPO.
Thank you.
Concentrating. Hi, my name is Umesh. I'm from the Samna newspaper. Why you are not concentrating in the north part of the country, which is agriculturally very high in production?
Let me. It's a very good point that you're raising. As you know that we are currently manufacturing 1.2 million tons of fertilizer, and most of the 1.2 million tons of fertilizer goes to the northern markets. Typically, in a fertilizer industry, you move your material to a distance of about 1,400 kilometers. And so we cover most of the north markets which fall in the zone. And just to give you a feel, we are a major supplier to the UP markets, both Western and Eastern UP. We are a regular supplier to the Punjab market, and we also there in Bihar. So northern markets are pretty much in our focus. And what we're doing today with our expansion is our product basket is also changing. Our product basket is moving away from DAP to NPKs. And NPK is a more sophisticated, specialized product, which is marketed and used more by farmers which are in the central part of the country and western part of the country. And that's why one of the reasons why we need to get these markets going. And I also strongly believe that over the next 5 years, you will find the northern markets also translating itself from the typical fertilizer they do today to a more NPK base. And I'm sure the market will be available to the company then.
And if I can add also, North, as Mr. Krishnan said, is a market which is today a bit more urea focused. Our markets of East, West, and South are those which have moved more and become more progressive towards adoption of NPKs. So the states of Maharashtra, Karnataka, AP, Telangana, they constitute over 44.2% of the total phosphate sales of the country. So there is an ongoing education program in all the markets, and especially so in the northern markets, to also change that preference from in a way excessive use of urea to moving towards these value-added grades around phosphates and complexes.
Thank you.
Hi guys, this is Darshan from Informis. My question is for the investment bankers. So despite a correction in markets, lot of uncertainties, frenzy among the retail investor remains unabated. Do you see any risk to the IPO in the current uncertain environment?
I think the fact remains that Gitanjali had asked this question. The IPO is extremely attractively priced. There are favorable industry tailwinds for the sector, and the company is well poised in terms of financial performance as well as product portfolio as well as the expansion strategy. We believe when you see the anchor book tomorrow, you would see marquee institutional investors in that anchor book, which will instill the confidence to a lot of retail investors to participate in this IPO. On a comparative basis, when you look at the valuation, this is very, very attractively priced. We do not foresee, the current market volatility to impact the IPO.
Yeah, just to add some numbers to that, let me say that, if you look at the RHP, you find that March 21, which is the last audited year, you see that the issue has been very competitively priced at 10.8 times. And if you compare it to the industry average, which is 15, so it is obviously much more attractive, being the second largest private sector player in this market. The second point also, if you look at the book value of the company as on 31st December 21, which is again published in the RHP, it's 2,189 crore, against which the IPO has been priced on a pre-money basis at around 2,400. So again, it looks very competitive. And the idea is to have very strong, attractive anchor book. That has been one of the focuses of the entire exercise. And that's what we intend doing, that the anchor book, which will be out tomorrow, should be strong enough. Pricing we have taken at, yes, to make it attractive for the people, for the given market conditions, as you just mentioned. So we are confident it should sail through that.
Hi, this is Lalatendu Mishra from the Hindu. This Mr. Nandi, the question is for you. You spoke about the impact of Russia and Ukraine war on the fertilizer market, also the impact on the supply chain. You also spoke about how you would be maximize production. If you can elaborate on that, and what are the prices, where the prices likely to head at? Thank you.
So in terms of the overall global supply chain, as we have witnessed, this is a current period of high stress in the supply chain, and that's being caused obviously by overall, this stress started with COVID, when China could not bring enough products to the market around 18 months back. And it has continued over the last year, never got a chance to correct itself. This year, now matters got kind of reached an all-time worst situation with the breakout of the war between Russia and Ukraine. We are going through it. I don't think anybody expected the war to prolong this far, but it has. Now we are in a mode to see what extent of the damage will this cause to the overall supply chain. We believe that the worst is behind us, and this is going to see a path of recovery going forward. Nothing worse than what it is today can happen, including prices and including availability of key fertilizers globally. As far as our supply chain is concerned, we are protected. We have remained protected. Till date, our production numbers are bang on target. We have not missed a days of production in terms of planned production. And this is courtesy our long-term relationships that we have for all the key raw materials. We have long-term for ammonia, we have a long-term for rock phosphate and phosphoric acid, as well as for MOP and sulfur that we have. And we expect this to continue for the foreseeable future, no stress that we see. Coming to your question related to prices and the impact, there has been a view, and rightfully so, that the impact of the war should not be passed on to our farmers, especially because a large part of Indian economy, close to 55%, depends on agriculture. And certainly a global war is no reason for causing stress and distress on the Indian farmers. So, and also because there is a conviction and a knowledge that this is a passing phase. It will correct itself and there will be normalcy that will return soon. With that conviction and that assumption in mind, Government of India has increased on a temporary basis the subsidy allocation. As you know, 60,000 odd crores has been provided over and above whatever has been the allocation in the budget. And courtesy this, the prices at the farmer end, and this is something in phosphates is a matter of choice of the phosphatic players, not something unlike in urea, which is set by the government. The industry has decided to virtually maintain prices at an even keel. And we expect that this will be good enough for us to weather the storm, and then better days will come as and when the normalcy returns to the market.
Yeah, hi. I'm Reba from Times of India. How would life change for Paradeep Phosphates now that a significant shareholder is making an exit?
Well, Paradeep was privatized 20 years back and has been running like a regular listed entity in terms of all governance and everything else. Yes, you're right that we have a Government of India, a major stakeholder moving out from here. But in our view, we've always got the support of the stakeholder in terms of various strategies that we are following, and that will continue to be so. And it is for the other key shareholders to see in terms of how they would like to progress beyond what we are today in terms of the strategies that we have. But I must say that the strategies that we are following today for the next 2 years have been well supported by government as a stakeholder, and it's getting under implementation.
Thank you. There are a few questions from the national media which has joined virtually. Money Control's Anubhav Sahu has a question. Currently, how much of phosphoric acid do we need to source from outside? Post expansion and backward integration, what will be the dependence on raw material imports?
So currently, so far, we have been 75% backward integrated. So which is say around 3 lakh tons. If we do, we would be needing another 25% of our requirement, which is slightly more than 1 lakh tons. Now there are two things happening. We are expanding our phosphoric acid capacity. We are also expanding our organically. We are also expanding the total fertilizer capacity, where we are moving from 12 lakhs or 1.2 million to 1.8 millions in Paradeep. So with that expansion plus the increase in the phos acid, we would be close to 90 to 93% backward integrated as far as phos acid is concerned. A key point to be noted here is that this extent of backward integration depends on the choice of products that we make. For example, DAP is 18% nitrogen, 46% phosphorus. So which means if you make DAP, we consume more of P. Whereas if you make a product like N20, which is only 20% P, we need much lesser P. So in certain product scenarios, we actually will become 100% self-sufficient in phos acid. And the choice of products, as I explained earlier, is determined by what the market demand is for fertilizers and our view on which products give us greater returns. So that's kind of a complex equation that we follow. So but we'll be close to 93% to 100% self-sufficient as far as P is concerned.
Business Lines, Shobha Ray has a question. Will the increasing price of fertilizers affect demand, and what will be the impact on Paradeep Phosphates?
Well, as we had explained earlier, the Indian farmer has been kept completely insulated from the spikes in the global prices today. And so there is no question of any demand destruction that's likely to happen in India.
A question from Smart Investment Weekly, Ahmedabad, Mr. Dilip Shah. Why was your top line in FY20 impacted, and how do you juxtapose it with the 9 months of FY22?
Well, the 9 months of FY22 primarily reflects the commodity prices for the raw material that we have procured and how they have been passed on to the consumer. So it's purely a reflection of that. And as far as the second point here to be noted is that we have also changed our product mix and expanded our margin, which is also getting reflected in the top line.
There's a question on from Business Remedies. Is the government supporting the phosphates business as much as it supports the urea business, and what is the take on that?
I think it'll be important for everybody to realize that the importance of fertilizer industry in general has been clearly highlighted during the last 2-3 years, wherein we have seen that the global supply chain disruption was primarily offset by a better performance by the local industry. During the first year of COVID, I think fertilizer is one of the best performing industries in terms of manufacturing in India. So I must very clearly state here that Government of India is completely focused on availability of all kinds of phosphatic fertilizers, and the focus is and phosphatic is as important as urea. I think that's very well realized.
Jaini from Chanakyani Poti has a question. Considering your earnings in 9 months of FY22, will you give some guidance in terms of whether this growth rate will be maintained in the near future, and what is sustainable?
I think we are not giving any guidance in terms of our future profitability, as we are just around the corner for the IPO is concerned. But as you would have seen in our all our statements, including the red herring prospectus, that there is a substantial increase in capacity which is happening, which will finally get reflected in the profitability.
Thank you. If there are no more questions, I would like to invite Mr. Atul Mehra, Joint Managing Director of JM Financial, to give the closing remarks for the conference.
On behalf of the team of book running lead managers, I would like to thank Mr. Suresh Krishnanji and Mr. Sablil for making a very valuable presentation to us. As a team of book running lead managers, as you would have appreciated in the presentation, we are truly excited to bring to you a story of Paradeep Phosphate, which is a leading manufacturer, which in turn is fully integrated. And not only that, it's a high quality trader and distributor for a variety of complex fertilizer, which is best in class. All this results in a very healthy bottom line, which, as ma'am said, makes it very attractive for the investor. And more importantly, what we as bankers like is the management quality. It's a very committed and a very motivated management team, which is making all the difference in the company. To the friends from the media community, we want to make a humble request to carry these messages, which are very positive and salient features of the company and the IPO process, and disseminate this information as widely as you can, so that every Indian has an opportunity to participate in the IPO. With these few words, I would like to say thank you very much once again for showing up. And if you have any questions, the management team is available informally to talk to you. And I invite you for the lunch. Thank you very much.
Thank you, everyone. We request you to join us for lunch, which